Thanks for joining us. Let's get your perspective in as well. Things are looking pretty strong right now, and we're just a couple of points away from that record high. It's inevitable. I think the bigger question is where to from here. How are you viewing the kind of momentum we're seeing currently? What's the outlook going forward?
Yeah, I think there's a lot of positive, factors which is creating a lot of positives for emerging markets in general, and particularly also having a rub-off on India. I think the resolution of the US-China trade wars and also softness across global growth is making all the central banks a lot more dovish than earlier. Softer rates, liquidity remaining more or less where it is, I think is quite positive. Inflation globally is contained and creates space for rate cuts within emerging markets, given that the developed countries are on a hold. So we do see a lot of stimulus for the equity markets in the emerging economies, and we do expect some more stimulus from the Chinese government, which will also push up growth in this region. So all said and done, I think the EMs look more attractive at this point in time, and with the dollar being more or less flattish, and so that's the view that we have. And I think within emerging markets, I think given the valuation comfort that was there in the broader markets, not just talking about Nifty, but it's more across the broader segments of the market and the lower market caps. Clearly, the money has started to chase risk, basically. Clearly, also the pre-election trade seems to be playing on, given that there has been a swing back towards the ruling establishment in the last couple of months. So I think, while it's very difficult to comment on electoral outcomes, I think, in the past we always seen that uncertainties kind of ebb away, and into the next 6 months of trade post-elections, we have a very strong continuation of the trend that was there earlier, and the trend is in terms of improving earnings at this point in time. So we think Indian equities are poised at a broader level to move, reflecting the strength in earnings.
Krishna, I guess, added to that fact would also be the missed out feeling, because the March rally, it's the FIIs which have had the better of it, at least if you were to go by the flows data. So I guess, with that missed out feeling, a lot of people would be jumping in at these junctures, and purely because of that, maybe we will stay afloat and be on the course for some more time to come, election or earnings recovery or what have you.
Yeah, I think point to be noted also is over the last 12 months, the domestic investors have been continuing to keep their faith in the markets, though the mutual fund net cash slowed down from 20,000 crores a month to 5,000 crores onto the equities, but you definitely have seen a fair amount of 2 lakh crores kind of coming into the market from domestic investors. So I think they have been prudent and having faith and continuing with their systematic investment plans during a decline, and I think they'll benefit from the uptick that is coming through. At the same time, I think there will be uncertainties, pockets of correction along the way in the next 3 months. So investors will find opportunities to come back in more stronger if they have a missed out feeling. So I think all is not lost for the domestic investors. There is a lot of rally still left in the market over the next couple of years. So people can definitely aim to have good targeted returns from equities also.
But from a shorter term time frame, would you suggest that the best is now behind us? Would you say once the election uncertainty is over and once there is some sign of an earnings revival coming in, there's more push that we are likely to see in the market? Or would you say that, be a little circumspect, it is scenario number 1 which is going to play out, and maybe it's now time to partially profit take?
I would think that a longer-term investor needs to continue to be in the markets and keep regularly putting money into the markets. The year definitely, is a year where the growth numbers, etc., from a macro could weaken, as we are seeing already. But the earnings momentum across indices is going to be quite buoyant. So in the previous years, we had probably upward trending economic growth and macros, and we had earnings which was a little flattish from 14 to 18. But right now, I think into the next 2 years, we will see that the earnings are going to compound at a much healthier clip, driven by the bigger sectors in the economy, the banking and financials, and some of the value cyclical sectors. So I don't think we need to be worried about short-term corrections and volatility. There would be opportunities to buy more rather than to book profit and sit out.
How lucky have you been for us? We were practically almost there, but just while chatting with you, we've managed a fresh